You check your bank account and see $473. Not great, but not terrible. You've got rent covered, maybe enough left over for groceries and gas. Then you get a text. Insufficient funds fee, $35. Wait, what? You had money in there. You check again. Now you're at $438. Another text comes in. Another $35 fee. In the span of 10 minutes, you just lost $70, and you have no idea why. My name is Todd, and I spend way too much time thinking about how banks make money off people who can barely afford it. If you're someone who's ever been hit with overdraft fees, minimum balance fees, or any of those random charges that make you want to throw your phone across the room, hit subscribe and give this video a thumbs up, because what I'm about to show you is going to make you rethink everything about how you use your bank account. Here's the thing. Your bank doesn't want you to have a high balance. I know that sounds backwards. You'd think they'd want you to keep as much money as possible in your account, right? More deposits, more stability, everyone wins. But that's not how the game actually works. Banks make the most profit off customers who keep low balances, and they've designed the entire system to keep you there. Now look, I'm not talking about some conspiracy theory here. This is documented, calculated, and completely intentional. According to a report from the Consumer Financial Protection Bureau, banks in the United States collected over $15 billion in overdraft and NSF fees in a single year. $15 billion. And here's what most people don't realize. That money didn't come from millionaires accidentally overdrawing their accounts. It came from people living paycheck to paycheck, people with average balances under $500, people who can least afford to lose $35 on a technicality. So why does your bank want you to keep a low balance? Because low balances are profit machines. Let me walk you through exactly how this works. First, there's the overdraft fee trap. When you have a low balance, you're way more likely to overdraft. Maybe you forgot about that subscription charge. Maybe you miscalculated by $10. Doesn't matter. The second you go even 1 cent below zero, boom, $35 fee. Some banks charge even more. And this is where it gets interesting. Banks don't just charge you once. They charge you per transaction. So if you overdraft and then 3 more charges come through before you even realize what happened, that's 4 separate fees. $140 gone, just like that. Now you might be thinking, okay, but I can just opt out of overdraft protection, right? Here's the thing. Even if you opt out of overdraft coverage for debit card transactions, that doesn't protect you from checks or automatic payments. Those can still trigger fees. And some banks have this thing called courtesy pay or overdraft courtesy, where they'll cover the transaction anyway and hit you with a fee, framing it like they're doing you a favor. It's like someone rear-ending your car and then charging you for the privilege. But overdraft fees are just the beginning. Let's talk about minimum balance requirements. A lot of checking accounts require you to maintain a certain balance to avoid monthly maintenance fees. Could be $500, could be $1,500, depends on the account. If you drop below that threshold at any point during the month, you get charged. Usually it's somewhere between $10 and $15 a month, which doesn't sound like much until you do the math. That's $120 to $180 a year, just for being broke. Here's what most people don't realize. These minimum balance requirements are specifically designed to target low-income customers. If you're living paycheck to paycheck, keeping a consistent $500 cushion in your checking account is nearly impossible. You need that money. So you dip below the minimum, get hit with a fee, which makes your balance even lower, which makes it even harder to get back above the threshold. It's a cycle, and the bank profits every single month you stay in it. Now look, banks will tell you there are ways to waive these fees. Direct deposit of a certain amount, maintain a combined balance across multiple accounts, linked to a savings account. But here's the psychological trick. These requirements are just complicated enough that most people either don't understand them or can't consistently meet them. You might waive the fee for 2 months, then miss the requirement in month 3 and get charged anyway. The system is designed to be confusing. And then there's the reordering scheme. This one is truly diabolical. Let's say you have $100 in your account. You make 3 small purchases. $5 at the coffee shop, $8 at the gas station, $12 for lunch. Then you forget you have a $75 automatic payment coming out for your phone bill. You're thinking, okay, I spent $25, I've got $75 left, the phone bill will clear. I'll be at zero but I won't overdraft. But here's what the bank does. They reorder your transactions from largest to smallest. So instead of processing the 3 small charges first and then the phone bill, they process the phone bill first. Now you're at $25. Then they hit you with the $12 lunch charge. Overdraft fee, $35. Now you're at -$22. Then the $8 gas charge. Another $35 fee. -$55. Then the $5 coffee. Another $35 fee. You're now -$95, and you've been charged $105 in fees for transactions that totaled $100. This practice was so egregious that multiple banks got sued over it and had to pay out settlements. But here's the thing, a lot of banks still do versions of this. They just got smarter about how they describe it. They'll say they process transactions in the order that best serves the customer, or some vague corporate language that means absolutely nothing. Now you might be thinking, Todd, why don't people just switch banks? Great question. Here's the uncomfortable truth. Switching banks is a hassle, and banks know it. You've got direct deposits to reroute, automatic payments to update, maybe a decade's worth of transaction history you don't want to lose. It's friction. And friction keeps people stuck. According to research, the average person keeps the same bank account for 16 years. 16 years. That's longer than most marriages. Banks don't have to make you happy. They just have to make leaving slightly more annoying than staying. But let's get into the real psychology here, because this is where it gets dark. Banks have figured out that people with low balances are in a constant state of financial stress. You're not thinking clearly when you're worried about rent. You're not reading the fine print when you're trying to figure out how to afford groceries and gas in the same week. That cognitive load makes you an ideal customer for fee-based revenue. You're too stressed and too busy to optimize your banking. You're just trying to survive. And here's the kicker. The people who can least afford these fees are the ones paying them most often. A study from Bankrate found that households earning less than $50,000 a year are 3 times more likely to pay overdraft fees than households earning over $50,000. It's a poverty tax. You're literally being charged for being poor. So what do you do about this? Here's the action plan. First, switch to a bank or credit union that doesn't charge overdraft fees or monthly maintenance fees. They exist. Chime, Ally, Capital One 360, most credit unions, they've gotten rid of these predatory fees. Yes, you'll have to deal with the hassle of switching, but do the math. If you're paying even $50 a year in fees, that's $50 you're lighting on fire. Over 10 years, that's $500. Worth the afternoon of paperwork. Second, turn off overdraft protection completely. Call your bank, tell them you want to opt out of all overdraft coverage, including courtesy pay. If a transaction would overdraft your account, you want it to be declined. A declined card is embarrassing for 5 seconds. A $35 fee hurts for the rest of the month. Choose the 5 seconds of embarrassment. Third, set up low balance alerts. Most banks let you get a text or email when your balance drops below a certain amount. Set that threshold at like $100, so you have a warning before you hit zero. This won't stop the problem, but it gives you visibility. Fourth, if you absolutely have to keep an account with minimum balance requirements, see if you can meet them by linking accounts or setting up direct deposit. But honestly, my advice is just leave. Those requirements exist to extract money from you. Don't play a rigged game. And fifth, if you've been hit with fees recently, call your bank and ask them to reverse them. I'm serious. A lot of people don't know this, but banks will often waive fees if you call and ask, especially if you're a long-time customer or it's your first offense. They'd rather keep you as a customer than lose you over $35. Be polite, be firm, and ask for a supervisor if the first person says no. You'd be shocked how often this works. Here's the bigger picture. The financial system is not neutral. It's designed to move money from people who have less to people who have more. Banks don't profit off wealthy customers sitting on huge balances. They profit off working people who are one unexpected expense away from overdrafting. And until we demand better, until we vote with our feet and move our money to institutions that aren't actively trying to screw us, nothing changes. So here's what I want you to do. Check your bank statements from the last year. Add up every fee you've been charged. Overdrafts, maintenance fees, ATM fees, all of it. Look at that number. That's money you worked for. Money you earned. Money that should be in your pocket. And then decide if you're okay with that, or if you're ready to do something about it. Because here's the thing. Your bank wants you to keep a low balance. But you don't have to play along.